We're here at Georgetown University for the McDonough School of Business Real Estate Summit. Joining us is Don Wood, President and CEO of Federal Realty Investment Trust. Do you see mergers and acquisitions activity picking up anytime soon in the retail sector?
Oh, I don't know. You know, whenever you talk about company deals and stuff like that, I really do think it's got much more to do with the social issues and pricing, certainly, within the individual companies. It may or may not. I know that you know, the good news right now with pricing, I think it is very expensive out there, as I think a lot of people believe. But that also makes the value of your currency, your stock, a lot more valuable. So certainly in cases, in the case of Federal, we could certainly use that currency and would love to use that currency to buy the right properties and even portfolios of properties if that can make sense. But you know, on the other side of it, prices are too high. And so, you know, whether there's an overall trend to increase M&A activity or not, I don't really know. I don't really see any signs that are saying, yeah, absolutely, right now. But you know, that'll depend on the particular people doing the deals.
Don, a year ago at this time, we were all talking about the wave of distressed assets that would be coming onto the market soon. It hasn't materialized. Why do you think that's the case?
It's a great country, isn't it? I mean, the liquidity that was thought to never return again. I mean, when we were looking in the dark days there, certainly is there. It's most certainly there when it comes to the public markets. And you know, as a result, to the extent there is a way to refinance out, to the extent there is a way for values to be higher than people thought they were going to be at this time, and with things stabilizing in the market, distress has a different different meaning. Now, that I still believe that there are a whole host of individual properties under there that are under distress. Those are not the ones that are all that valuable, though. I think there has been a flight to quality. I think there'll continue to be a flight to quality. It's driving those prices very, very, very high. But if there's anything that this recession has taught us, it's that you got to look at this stuff over the long term, I think. And over the long term, you really do need higher quality real estate.
Now that we're starting to see the economy recover, how would you say that your operating fundamentals are holding up?
Well, you know, in our business, which is retail real estate, it always starts with the retailer. You know, retail sales have dropped for the last year and a half. They have clearly stabilized now, generally. You know, I look at some first quarter data, and I really have seen, you know, a bottoming. Now, those comparisons are awful easy with the first quarter of last year. So the last thing in the world I want to say is, oh my gosh, the consumer is spending, the world is great, and that's going to continue, because I don't think that's the case. I do think that there's you know, a ways to go to answer a lot of questions with respect to new consumer preferences in terms of the value proposition, and certain different categories are going to be better than others. But it sure looks a whole lot better than it did a year ago.
Thanks, Don. For more information on this and other REIT news and analysis, check out REIT.com.